The mergers and acquisition space is starting to pick up back up in 2024, is coming after a lull in deal making last year. For more perspective on the M&A space, we have Karen Davies, Huntington National Bank Executive VP and Executive Managing Director of Credit Products. So Karen, it is good to see you. You say M&A is poised here for a rebound this year. How come, Karen? What are the reasons?
Well, it's been sleepy. The past 2 years have been sleepy. A lot has been going on, obviously. We had some turbulence in the banking market last year, which we're obviously worked our way out of. But, and rising interest rates have put people on the sidelines. So we believe, along with Alan here, that maybe 3 rate cuts are coming as well. And we believe that that'll bring the capital back to the market. The credit markets have opened back up. The deal making has already started to pick up in the first quarter. Large deals are usually an indication of confidence in the market. So we've seen some mega deals already come to market in the first quarter. So we think that that is a very good indication of what could come in 24 and 25, a continuation of that trend. Obviously, we're reliant on those rate cuts to help ignite that speed at which that moves. But I do think there's still a lot of pent-up demand, whether it be private credit, whether it be bank lending capabilities and capital that we have to put to work. And we're seeing it already at Huntington in our pipelines that the deal flow is picking up, not only on the buy-sell side, but also on the pitch side with our investment bank arm.
Do you think that the presidential election will also play into timing at all? Especially because the later the rate cuts come, the closer it gets to the election. So if I'm a company looking at making an acquisition, maybe I say, well, maybe I just wait a little bit longer to go ahead out.
Right. It could. It certainly could. I mean, this is one of those where, I'm a banker, I'm not an economist, but, and I would say investors might have an opportunity to make decisions based on monetary policy versus politics, but politics could certainly swing things one way or the other as we talk about personal tax implication and corporate tax implication. But I think there's also this moment of a pretty significant one refi cliff that is coming in terms of the larger deals in leveraged finance. You've got a lot of private equity firms who've been holding deals for longer than they've wanted to. The window is opening up right now for them. So I do think, it may not come at the exact pace. If they don't hit the window by 9:30, I think they could be sitting on the sidelines waiting it out, just like we saw in prior election cycles where they might hold off on M&A, they might hold off on CapEx to see what type of impact that might have to their business.
And the pickup in activity that you're expecting, are there certain sectors or industries where you would expect that to be just kind of more pronounced?
Sure, yeah. We're already seeing it. So at Huntington, we're headquartered in Columbus, Ohio, so feet on the street everywhere through our lending verticals across the country, heavy Midwest, now in the Carolinas, now in Texas. Capstone is part of our investment bank. So together, we bring all those groups together, and we're seeing it in tech and telecom, healthcare, data centers, as that is sort of a substitute for a bit of, the different type of tech and telecom deals that were happening before. A little safer space for commercial real estate if you want to play there in terms of tech and telecom. We have added some capabilities around the sponsor coverage, so we have fund finance capabilities. Automotive, just where we sit. We watch them go through their cycle of supply chain. We see a lot of companies there. They seem to be doing well, but also anything sort of consumer healthcare seems to be picking up too. So a little bit of everything.
Are you seeing signs of, I think when Alan was talking about grumpiness, he was talking more from maybe more existential grumpiness and more on the consumer side.
Yes.
But I am curious, sentiment-wise, what you're hearing, because you talk to a lot of different industries and you're there in the middle of the country. So what are you hearing?
It's not as grumpy as you would think. I would say that what we're hearing from our CEOs of the middle market companies and mid-corp and large corp businesses that we bank today, optimism. We're hearing optimism. We're hearing that the economic indicators that they see should put themselves on a path to either make the investments that they need in their businesses, do M&A that might be strategic for their businesses, invest in the capital expenditures, and kind of pull that lever to keep moving along. They've made some changes already to their business with interest rates higher for longer. So I think right now we're hearing a lot of optimism. We're hearing our clients reaching out to us for guidance, timing, and sort of sector-specific opportunities that we follow.
Karen, also I had a question about Intel, which is building out that new chip factory in Ohio.
That's right.
What is that going to mean for the state, for the Ohio economy?
Right. A great deal. I think it's phenomenal. This is the largest investment, in technology or in industry in Ohio's history. So being headquartered in Columbus, right down the street from where this chip plant is going to be, with the first phase being $28 billion of investment, it's not just the plant. It's what it stands for. It's the semiconductors, it's the suppliers around the plant and the ecosystem and the building and the infrastructure and logistics. We have a dedicated area that we have around, kind of naming it Silicon Heartland, Silicon Heartland, so that we can support that growth. And we're thrilled. We're thrilled they're going to be our neighbor.
All right, Karen, thanks so much. Really appreciate you coming in to see us.
Sure. Thanks for having me.